मेरे साइड से हो जाएगा ना?
हाँ।
एक बार सिर्फ आप मेरे को चेक करके बताना। आज सेशन क्या 32?
तो ठीक है।
ओके, थैंक यू. Yeah, I think we are live. Okay, fantastic. Hi there. Good morning. Welcome to another AMA session at FinTree. This is session number 32. Every Saturday morning, the same time we meet. I think last few sessions we've also been inviting some guests. We have general discussion on some interesting concepts. So today I have Ajinkya with me. Ajinkya is a founder of Wint. I was telling Ajinkya some time back that I got introduced to Ajinkya through one of our CFA level 3 students, Dinesh. Shout out to you as well. Dinesh used to work, or I think he's still working with Ajinkya. But I discovered Wint quite before that. And how I discovered your platform was I was teaching fixed income to my students in the classroom, and we wanted to search for some high yield bonds, and then we were searching through different websites. So that's where we came across your platform. So Ajinkya, welcome to the show. Thank you very much for your time. Why don't you go ahead and introduce yourself? Maybe we can start with what's your background, and then you can focus a little bit on Build Wealth.
Okay. Okay. So I don't have any formal education in finance, no formal degree.
That's a good starting point.
I'm a mechanical engineer. Have done one previous startup and invoice bill discounting. Then worked at a couple of fintech startups in lending space, and then started Internship. So didn't have like any wealth exposure as such before starting Internship. Learn things on the go. Right? What we do at Wintwealth is basically we sell high yielding secured bonds to retail investors, bond that give you about 11-12% return, right? 1-2 year maturity. What we do is we also co-invest in these bonds. So investors have added layer of trust or added level of data. So we do due diligence, we do, even ground research, etc. And the bonds that pass our criteria where we put our own money as a company, that only we bring it on the platform. And we have started bonds. Now we cross-sell FDs, we cross a bunch of fixed income funds. So idea is to develop this as a fixed income destination for retail investors.
Interesting. And how old is this organization now?
About 5 years.
5 years. So what's this business model called? Are you like a platform for fixed income products, or are you like operating like an exchange or a distributor?
No. So we are a broker. SEBI came out with a specific regulation called online bond platform providers.
So
We are
there's a
basically called
dedicated
online bond platform provider. We
okay.
have online bond platform, and we are a subcategory of broker. We are a registered broker with exchanges.
Interesting. Okay. So let me ask a few investment related questions, then we'll go specific. So I'm not a bond market investor. I think that's true for a lot of people in India. So when we think of fixed income, हम लोग सोचते हैं FD कर लेते हैं ना, fixed deposit कर लेंगे, and then we think of equities as a compounder. What your platform happens to provide is basically सिर्फ equity मत सोचो, कुछ bond में भी पैसा लगा सकते हैं. And in fact, you said something like high yield, right? जहाँ पे you were saying that you can make 11-12% type of return. So you can also make double-digit returns within the bond market.
Yes.
Can you explain to someone what is that fixed income space as a whole in India at the moment? What are different products which are available? And what is a high yield bond exactly?
Good. Okay, so on fixed income side, and I'll focus mainly from a retail investor perspective.
Correct.
For HNI, there are a bunch of more products available. So if you just look at HNI, I'll briefly cover that. Debt funds are not that attractive anymore because there was a tax advantage in debt funds that's gone. So these bonds, the bonds
So when
that
you say funds, you mean debt mutual funds?
debt mutual funds, yes.
Okay.
These bonds that we offer have been offered to HNIs for ages, right? Through offline channels. So there are also AIF, which kind of focuses as a fund structure on these bonds where somebody manages that money. These AIF are semi-liquid, will give you 9-10% kind of yield. Then there are performing credit, little bit on high risk, which will give about 14, 15, 13, 14, 15, depending on the risk
So
appetite.
these are through AIF structures.
That's through AIF, where the minimum investment is 1 crore.
1 crore. Okay.
And then there is special situation debt also, which is either promoter funding, restructuring, etc., where they target yields of about 20, 22. And obviously, so these are target yields. There will be defaults, then there will be fund manager fee, etc. etc. There is one more product called venture debt, so which basically gives debt to startups.
Okay.
They target about 16, 17%, right? So these are very HNI specific products. And then there are some tier two opportunities also from HNI. So tier two capital bonds, perpetual bonds, tier two capital bonds, these are available for HNIs. For retail investors, the options that were previously available were FD and debt mutual funds. With the tax advantage of debt mutual fund gone, they don't make any sense to retail investors, except liquid funds, right? FD is a great product. But let's say in FD, you'll get in small finance bank FD, you'll get 8-9%. In normal bank, you get 7%, and that money is locked for certain period of time. So there are then there comes high yield bonds. So these give you about 11% return, minimum investment of 10,000, tenure about 1-2 years, right? In these bonds, you can make 12% return, and you can diversify by yourself. You have to diversify by yourself. So that is another option. How we look at it is, yes, equity is a wealth compounder. Even if I have to put money for 10-year plus, then I'll choose equities. But let's say if first is I cannot be putting 100% of my money in equities. I want to diversify beyond equities. I'm okay to take a little bit of risk. That's where these bonds are a very good, way to put in money. The bonds we bring on the platform are issued by generally NBFCs, which are A-rated, triple B rated, right? Generally A-rated, and have a very healthy balance sheet. We kind of play on the rating arbitrage. So their borrowing is decided by their rating, but not their financial health is not necessarily 100% tied up to rating, right? And we basically figured out the arbitrage positions there, and we bring such bonds on the platform, arbitrage from our own POV.
Sorry, can you come back on? You said borrowing is dependent on rating, but
Yes.
rating is not.
Sorry?
You said borrowing is dependent on rating, as in you mean the cost of borrowing is a function of what credit ratings this NBFC
Yes.
will have.
Yes, generally. Matlab, it is function of bunch of things. One is rating, then the asset class they are in. But yes, it is function of rating.
Right. So you said what is the arbitrage? I did not understand that point.
Got it. Okay, this bit technical, I can explain it here. So if let's say in general, there are a lot of repercussions for rating downgrade, right? So while upgrading the rating agencies are in first place conservative to give a good rating.
Right.
Now, let me take an example of NBFC, which is what we mainly do, is the maximum leverage possible from RBI's POV under RBI's regulation. It's somewhere around 5.6 or something, right?
Okay.
So rating agent, even if let's say NBFC's leverage is 1, not legally or not in a very standard model, but rating agencies will assume that this NBFC will go to certain higher leverage. Therefore, they calculate the rating that way. But for example, there is a bond where under the terms and conditions, you have control the leverage to, let's say, 3 and 4. Right? So the rating is theoretically applicable considering the larger leverage, but you have capped the leverage, right? So that makes the bond safer. Second, let's say a AAA rated entity is there. If it is issues unsecured bond, that rating is still AAA. Because rating basically measure probability of default and not probability of loss. That means on the day of maturity, is the NBFC going to pay? Right? As a retail investor, I'm more worried even if that money is delayed, will I get my money back? Right.
Right.
Instead, if I have
a given default.
Yes. Instead, if I have a bond which is A-rated but which is secure, where the collateral is really good, then even if that obviously that compared to AAA, the probability of default is higher, but probability of loss can be lower. Right? So if you choose a bond which has like proper collateral, which you have an NBFC where under the terms and condition leverage is controlled well, NBFCs run well, corporate governance is not an issue. right? Quality, underlying asset quality. Then you even if you choose a A-rated or triple B rated bond, uh, the safety of the bond can be higher compared to rating. That's what we come in, and we basically have a philosophy of choosing these bonds based on these
So
factors.
your thesis basically is that you feel maybe the current rating is overestimating the true risk that's embedded in the particular bond. Uh,
Yes,
therefore, you're getting a better yield for the level of risk. मतलब एज ए इन्वेस्टर मैं रिस्क कम ले रहा हूँ बट फिर भी
yes,
मैं उससे थोड़ा 1% 2% ज़्यादा कमा रहा हूँ,
yes.
right? And the arbitrage source, in your opinion, is because the rating agencies are not capturing some of the variables that you think are important.
They do, but obviously, when every if you take any system, there is going to be some pockets where it will not consider, right?
Understood. Very interesting. Okay. But I think the question, is the rating very specific to a particular bond, or is the rating assigned to a issuer in India? How does it work?
It is issue. It is issued to a issuer, right? So
It's
that
not bond specific.
no. So even if that bond is secured or unsecured, the rating is same.
Oh, that's very interesting. Okay. So, which means, let's say some XYZ NBFC issues two bonds. They have different rights, maybe secured,
Yes.
unsecured. You're saying the rating of both of them will be same?
Yes.
Very interesting. Oh, I didn't know that. Acha. ठीक है. So, what is the risk then? So, I understood that it's a high yield bond. High yield को शायद हम लोग और एक we also call it as non-investment grade, right? Is
No,
that
no.
no?
So non-investment grade is so triple B minus and above are investment grade.
Correct.
Non-investment grade or junk are below. मतलब,
Right.
double B.
So you mean when you mean high yield, you don't mean non-investment grade. You still
No,
mean
no,
in.
no. None of these bonds are. All of these bonds are investment grade.
All of these are triple B and above rating. So which means they are safe, but you still earn a little bit of higher yield on them. That's your terminology of high yield. Okay, interesting. So why are people doing FD then? Where can things go wrong? Because even today, if I do a fixed deposit, I get 7-8% as you said. These bonds are easily offering 11 to 12%. So why do you think FD still exists? Where is the gap in the market now?
Yeah, no. FD will should exist. I mean, it's like if you are not okay with the risk, then you will not invest, right? So these bonds are definitely riskier than FDs, and we can discuss the risk also, right? So you can mitigate that risk. Like, see, if you go for any high return product, there is going to be risk involved, right?
Right.
Equities are riskier than FDs, but the risk is mitigated well by probably diversifying amount. So mutual fund mitigates that risk by defining, categories, large cap, small cap, and then making sure exposure to one stock is not more than 10% ETC, right?
Understood.
So any high yielding product, there will be risk involved. In a good product, the risk will be mitigated well.
So
Since
see why I asked this question. I think in India the retail participation in bond markets is very low, right?
yes,
And probably some part of it is also lack of awareness because people probably don't understand the concept of bonds so well.
bunch of reasons. Awareness is one. Second was also a bunch of regulatory challenges which have gotten solved a lot in last 2 years. So high yield bonds were typically issued at a face value of 10 lakh rupees earlier.
Right. Okay.
If the minimum investment is 10 lakh, then it's very hard for retail investor to come in. About 2.5 years back, SEBI reduced that from 10 lakh to 1 lakh. And about 6, 9 months back, that has been reduced to 10,000.
Interesting.
Right.
So I can take a little bit of credit risk. Your platform provides me curated bonds. So I'm assuming that so every bond that comes on your platform, you've already done some credit risk evaluation
Yes.
to some extent.
To a large extent, because we are putting our own money into it. We are
Right.
not guaranteeing return, but we co-invest and hold till maturity.
Right. And you said on an average maturity of these bonds is 1 or 2 years,
Yes, not more than 2 years generally.
not more than 2 years. So these are all, so less than 1 year, then what does it become? It becomes a commercial paper or it can still be a bond?
No, so if the residual tenure, at the time of issuing the bond, if the tenure is more than 12 months, then it is a bond. If it is less than 12 months, then it becomes commercial paper. We haven't
Right.
started doing commercial papers. In commercial paper,
Both. You have commercial paper as well as bonds.
no, we haven't started doing commercial papers. There are some regulatory challenges we are working. with the regulator through our association to solve the.
Understood.
But if a bond has a residual tenure of 6 months, doesn't make it a commercial paper. Why? Because that bond was issued when the tenure was more than 20.
Yeah. So, matlab original maturity. So, at the time of issuance,
Yes.
my original maturity is more than 1 year. It's a bond. Less than 1 year, we generally call it as commercial paper.
Yes.
Okay, understood. So, your platform will have only bonds.
Yes, currently.
And I'm assuming all of these are primary issues. There's no secondary trading that's happening.
No, all of them are secondary actually.
Is it?
Yes.
Okay. So it's not the company selling the bonds to the investor. It's already been sold, and now yours is a platform that's.
Yes.
Explain me how is that working?
Uh, so so today, I mean, so there are two methods of issuing a bond, issuing a listed bond. One is public issue of a bond, which more operates like IPO, where people come and directly subscribe in
Right.
primary. Second, there is called private placed and then listed. So it
Okay.
is privately placed to investor and then listed. Uh, the compliance is little lower in the privately placed. In publicly issued bond, the ticket size can be 1,000 also. But in privately placed bond, ticket size is 10,000, right?
Hmm.
So, but the compliance is much lower compared to one
From the issuer perspective.
from the issuer perspective. So, a lot of issuers want this privately placed
Hmm.
bond, which are listed. So, what happens is we go to issuer, help them issue a bond, get that subscribed from from our own balance sheet, let's say, and then we downsell it in secondary market.
Interesting. Okay. And how is the cash flow passed then? So bonds, I'm guessing, are also dematerialized
Yes,
instruments,
these are listed bonds.
and these records are done again with depositories like
Yes,
CDSL.
yes.
Right. So eventually, the legal ownership of the bond remains with the investor,
Yes,
not with.
yes.
So you're an intermediary where, for example, let's say I'm a issuer. I want to raise, let's say, 100 crores. So I come to you. You do my evaluation. You feel it's okay.
Yes,
I issue the bonds to you. You give me the money. My job is done.
yes,
You take those bonds and then try to further sell them to variety of different investors on your platform.
yes,
Is that how the system is working now?
yes.
And then when you do this wholesale transaction, you would keep some spread for yourself. How
Yes,
will that?
about 1.5%.
1.5%. So that's your revenue model on the
Yes.
platform currently. Understood.
Yes.
Okay, very interesting. So let's think from investor perspective. So let's assume, like historically, I think India has always been a land of FDs and gold. है ना हम लोग वही खरीदते थे सोना खरीद लो जमीन खरीद लो. I think after COVID, we've also become a land of equities now with so many new retail equity investors coming in. If some investor with a small portfolio, let's take a portfolio of maybe a total 3-4 lakh rupees, a reasonable size portfolio. They think that 1 lakh out of this, I want to move to bond markets. Okay,
Very good.
how can they come on your platform? How can they design the portfolio? क्या क्या कर सकते हैं और क्या 1 लाख में bond investment हो सकता है क्या?
हो सकता है उसमें कोई टेंशन नहीं है. I'll like obviously we cannot give advice, but I'll just generally tell how people should do.
Yeah, generic structure, yes.
So minimum investment is 10,000. So if and generally you should diversify across 5-10 bonds, right?
Hmm.
Even 1 lakh you can diversify in 10 bonds. So that's great.
Hmm.
What people should do is start small with 10,000, understand the product, see how it works, and then as they understand more, they get repayments, they build confidence, and they keep investing more, right? So diversification is the key, right? All of these bonds are also liquid on our platform. You can sell it provided that there is a buyer. We also help you find buyer,
So
right?
you're also a platform for you to resell the bonds if I need to liquidate between the time.
Yes, we help you find buyer. Generally, we are able to find buyer. But let's say if there is a strong negative news about any NBFC specific or sector specific, there need I mean potentially there will not be a buyer.
Hmm.
Or that buyer will be at a very like you will have to sell that bond at a higher risk, right?
Hmm.
So if you're diversified well across 10 NBFCs, out of 10, 8, 9 will be liquid, generally, right? Unless something like COVID happens where liquidity is completely drained and there is no liquidity in the market, everybody is sitting just on, right? So liquidity is there. So like so that's the value prop. So you can diversify well, you can then that makes sure that you don't have like higher exposure, concentrated exposure to one bond. And second, you also get enough liquidity because if you're diversified.
Right. But then one risk I see in that approach, Ajinkya, is if I do my fixed income allocation on your platform, then the only sectoral exposure I'm getting is NBFC,
Yes.
right? So if NBFCs are under some sort of a pressure, then my bond portfolio would be under pressure. Is there a way I can diversify that sectoral risk on the platform at the moment?
No, so we will also go multi-sector. Uh,
Right,
we
eventually.
grow. Yes. So we will also look at other sectors. Right. But within NBFC also there is not one. NBFC as a sector is one specific sector, but it's a mega sector, right?
Right.
There are subsectors like you can look
Someone
at.
is lending to doctors, someone is lending. So that way, my eventual industry exposure is different, is what you're saying.
So somebody might be doing MFI, some NBFC might be doing MFI, some might be doing secured SME, some might be doing vehicle finance, some might be doing solar finance, some might be doing education finance, some might be doing PL, digital PL, personal lending, right? So there are a bunch of options available.
Understood. So you said how old is this platform now?
5 years about 5 years.
5 years. Have you had any instances where defaults have happened or
Yeah, we're probably the only platform where defaults haven't happened because we co-invest. Other platforms have seen defaults, online bond platforms.
right? So, and how does the co-investment work? Have you set up an AIF yourself, or is it your personal money? How is the
It's
co-investment?
basically company's equity. We operate our treasury operations. So we invest
Right.
in uh, and we make sure that we have that holding right throughout the between our group entities. We haven't
Right.
set up any AIF. Eventually we will because the volumes are still not very high.
Right. And generally, what percentage of the total size? 2%.
Yeah, so our idea is we make about 1.5%. So we invest 2%. So we only get paid if the bond matures successfully. Right?
Hmm. Interesting. Okay.
We have skin in the game and we only make money when if the bond is maturing successfully, which has happened 100% of the time still.
Right. Okay. And this is, you've also experienced times when MFIs have gone through, or micro lending organizations have gone through a lot of stress.
Yeah, we are actually going through that time and all of like we did internal assessment of the assets that we have and that are on the platform. We don't see any risk, any semblance.
Interesting. Okay, good. I think that gives a good idea. Let's talk a little bit of you now. You said you don't have finance background. How did you end up here? Why did you think there was a need to do something on this particular domain?
See, I wanted to start up. I saw bigger, like I saw this could be potentially huge. India has crazy obsession with fixed income product, and when we started, all the platforms are equity focused. So there is what we realized there is a big space for a fixed income platform, and that's where we started building out. Right, and then obviously I have a co-founder who has been working on this space, so he has been underwriting NBFCs for about 10 years. Uh,
Okay,
we have a solid team on the risk side to take care of things. Right.
right.
So yeah, so I mean, I basically build a team. We like you have to realize when like where you can do first principles thinking, where you have to do first principles thinking, but have to have expertise also, right? So you have to basically you can build teams, right? You need not do everything alone.
Understood. Okay. But what's your background? What did you study? When did you give us a little piece on yourself? Where you from? You're a Maharashtra boy. You were talking earlier.
Born in Nasik, till 12th I was in Nasik, then went to IIT Gandhinagar, mechanical engineering. My father has a manufacturing business, automobile ancillary,
Okay.
and, as a supplier basically. So after graduation, I worked in my father's business for 2 years.
Hmm.
Didn't enjoy it a lot, but learned business basics, learned business finance, like
Hmm.
cash flows were like not in terms of books, but how cash flow operates and how liquidity and everything. Then started my first startup, which was basically B2B e-commerce platform, but pivoted to invoice bill discounting. Right? And that's where landed in fintech and found it very interesting. Started reading, started talking to people, uh, right? And then kept like because I was enjoying, I kept going and eventually landed up in fintech.
Very interesting. Okay. Any other opportunities you see, Ajinkya, today in fintech space? Let's assume someone is listening to us thinking maybe I want to do a startup in that area. Do you see any gaps in the market where someone can come in and plug in those gaps, especially within the fintech space?
There are always gaps, I mean, right?
Hmm.
So
So, is there anything on your mind at the moment?
so there are a bunch of like see, it's very difficult to predict those. Like I can basically tell you mega trends, right? DPI is coming up, so lending is going in big way.
Sorry, what
Different
is coming up?
DPI, digital public infrastructure, right? All
Right.
this. Jandan, Aadhaar,
Hmm.
mobile digital data, etc. And then came UPI, and then
Correct.
account aggregator,
Hmm.
Open, ONDC. Bunch of things are happening, right? So those are fundamentally change the nature how fintech financial services are offered, right? Uh, so uh, so if you see, okay, everything there is an opportunity. I'll say there. I don't know about payments, but lending there is definitely big opportunity. Wealth there is definitely big opportunity because now people have transacted online a lot. They
Hmm.
now that advisory will also come online sometime, right? So there, but like in wealth there is a space, in lending there is a space. In cross-border payments, I keep hearing that. I don't personally know, but a lot of startups are getting funded. So in general, see if the economy is fundamentally changing, right, and especially in India with so much focus on digital public infrastructure, everything is up for grab. Any old business, whether it is lending, payments, wealth, is gonna get has gonna get a tech flavor of it, and tech is gonna fundamentally change how it is going to be
Hmm.
operated. Then AI is coming, that is gonna change everything, potentially every business, right? So there is a lot of opportunities. I don't really like.
Interesting. How do you think AI will change the lending as a space? Do you think it will create a lot of new opportunities, maybe make underwriting easier?
So already, I mean, you see bunch of platforms leveraging AI very well on collections, uh, right?
On collections?
Yes. Many of these automated calls are by handled. AI is able to converse, voice converse, right?
Oh, you
So
mean जो recovery के लिए phone आता है?
yes,
So those are AI calls now.
yes, many places it has happened.
Interesting.
Uh,
Interesting.
so that is first use case. As it goes deeper, it will further build those cases, right? Uh,
Hmm.
that I clearly see. So all of these things, see, if you ask me about wealth, I know how AI will play a role. In lending, we don't really have that much exposure, right? Uh, as they happen, it becomes very obvious. Okay, this was bound to happen, but like it is very difficult to predict
Yeah.
it going forward if you are
Anytime.
not the industry.
Anytime.
Wealth, I can definitely tell you will play out.
Sure. I'd like to know, but how do you think AI will affect wealth management industry?
Sure. So what I think is, okay, fundamentally, if you cut investors by portfolio size, right? There are two, three sizes. Beyond 5 crore, these are HNIs which are properly served by offline market. And there is second cohort is 50 lakh to 5 crore. Their third cohort is 10 lakh to 50 lakh. This I'm talking about portfolio sizes. Okay. Now this 50 lakh to 5 crore portfolio, jiska size hai, that guy is underserved. He's served by RM, bank RM majorly, right? And he knows that RM is trying to missell me things. So he doesn't like, but he has no like, and he might have a IFA also offline, some portion, but he's offline presence. Uh, in 10 to 15, it is generally completely DIY. Even 50 to 5 lakh, 50 lakh to 5 crore, it is mainly DIY investor. They operate their portfolio. They are not, they might take help of advisors, distributors, etc., but they are calling shots per se, up to 5 crore. When we looked at advisory as such, if you need a quality advisory, the person giving advisory has to be little bit intelligent, right? Has to have good soft skills. And that will, so our assessment was that if you have to do quality advisory, even if you, let's say, centralize research, everything, the cost of that advisory per person will be at least 1 lakh per year.
Okay.
And guys below 5 crore are not ready to pay up that kind of. Now with conversational AI, that could be done at a much lower cost, let's say 1,000, 5,000. So this is where AI is going to play a big role. I mean, and with account aggregator, you get all the data at one place. So that is another mini tailwind, right? So you have all the data at one place. You have AI who can converse. You have AI who can design algorithms, portfolio, etc. Just keep aside the regulation that that will also evolve. But as of now, I don't have a regulation idea on RIA regulations in depth. But this is where basically like I will have a kind of AI agent, wealth agent who will know my portfolio, and I can ask him questions. I can set up goals and it will tell me, okay, this is how you should operate. If I tell him that, okay, I want to invest in 10 lakh in high risk stocks, It will potentially suggest me stocks.
Hmm.
It will invest. It will give me exit signals. I can design a system. And this simply, I might just tell me, I'll just tell AI, okay, if I have 10 lakhs and if I want to invest like Warren Buffett, what are the stocks you can suggest and what are the exit points? And just send me triggers when these exit points come. And this is what I need to tell now, right? Everything can be done at the back, earlier you had to be a coder, you had to have algorithms,
Yeah.
integrations with servers, everything, right? So this is gonna fundamentally change.
Interesting.
I I could tell, okay, I have 1 crore and I want to retire at the age of 45. This is my salary. It will tell me, okay, you first need to focus probably on increasing your salary, then increasing your savings, then put it in this mutual fund, whatever, right? It's gonna, and I can have conversation saying, okay, this doesn't look comfortable to me. I don't think I'll be able to save so much. So what should I do? And AI will potentially tell me some options.
Interesting. I think to some extent we've had those robo advisory platforms for a few years now in India.
Yes, but the problem is it doesn't feel human.
It doesn't feel human.
Current, this is
Yes,
very human.
interesting. Generally, I think I've spoken to a lot of distributor about this. They have an interesting insight. Uh, AMCs, a lot of AMCs like money coming through these traditional distributors because I think in bull markets, no matter what source of money you get, whether it's coming through robo advisor or even direct schemes in mutual fund, that money stays. But the moment markets are under panic, it has been observed that the money that human distributors bring has been more stickier
So,
than
no,
other
no.
sector money.
Yeah, those distributors play a role of like monetary counselor also. So it's a psychological counseling, saying stay put. In
Yeah,
fact, I was looking at data in January because we had a bad month uh, in stock markets. More than 9 lakh SIPs have been cancelled. Net gross level bit will be more. Huge
correct.
number.
True, very true. Okay, let's take some questions on the online platform, Ajinkya. I think we have some audience attending the session live. Let me just open the YouTube video. Okay. All right, I'll start. So I've come on YouTube now. We'll start taking questions. So if you have any queries, feel free to post them. Akash is asking, what is a co-investment and how does co-investment work?
Oh, co-investment is it's basically we also invest. We invest together. So let's say if we bring a bond of 10 crore, then we put in 20 lakh and hold. So
आप मेरे को बोल रहे हो कि आप पैसा लगाओ तो आप भी मतलब you would also invest along with me.
yes, I'm not selling you shit to make money.
Sure. That's a good explanation. That works. Next question is from Sakshi Gautam. Um I have 3.5 years of experience in financial Okay, this looks like a career question. Okay, this one will take it little better. Uh, Here's a question for you. Have you heard of? I'm sure you've heard of CFA program. Have you been recruiting CFA? What has been your experience with CFA candidates? What's your view and perception of the program? How big is your team, by the way, now?
Yeah, so we are 90 people. Our finance or basically asset team we call, which basically sir, like make sure assets are due diligence proper, everything. It's about 20-member team. Our risk team is a 10-member team.
Right. Okay. So, what's your perception of CFA?
So we mainly recruit guys who are CA. Many of them turn out to be CFA. We don't really have anyone who hasn't done CA and is just a CFA. Okay, I think I.
मेरा stream हो रहा है क्या अभी?
Yeah,
Yeah,
I
I think
think.
okay. You're back now. Glitch. On my side.
Yeah, no. So I think all of the guys we have are CA plus CFAs. We don't really have anyone uh, who's
Who's
just.
only?
But we are not really. We are a small team, so that might have happened. It's not that we really want somebody as a CA.
Understood. So in general, I think in your type of profile, probably you need people who are more versed in reading accounts and doing legal documentation. So CA fits the role better than CFA.
Yes, I mean, reading legal is different, but who understands basically, so in risk, you basically have to figure out what the documents are showing, what is it, the real picture, right? So you need to have very good understanding. You need to have way to know, where you have to figure out that weak spot by putting, by tapping the ground and then digging deep there, right?
Understood. So you do need some analytical skills as well.
Absolutely, absolutely.
Okay.
And people can learn that on the go also. See, we
Mm,
are a small team, so we also need someone who can run from the first day, right? At startup. So therefore, we prefer CS today. But as we grow, we will have people who even may not have any finance background, just are interested, who might join us as intern. If they show caliber, if they show they can do the job, they will grow.
sure. Fantastic.
After all, I come from like I don't have any finance degree as such.
Correct. Yeah. In fact, you'd be surprised. I think a lot of big hedge fund managers across the world do not have basic or do not have formal finance education. Many of them come from science background, like physics, chemistry. They end up doing good. All right. Again, a question from Akash. Sorry, question from Shubham Malani.
Yeah.
Uh,
I'd also like to qualify this a bit. Uh, like, like if you want to become specialist, let's say fund manager or something, having that initial finance degree definitely helps. In my case, I'm a startup founder more than I'm a finance guy. Like, I have a co-founder who is also a mechanical engineer but has done CFA.
okay.
And he broke into finance. His campus job was not in finance. He was based in some consulting or something. But he wanted to uh, join a financial uh, uh, industry. So he did CFA and then came into finance. And so that's how he got opportunity because he did CFA. He doesn't have a CA degree. He's from IIT Roorkee.
Understood. So I think both of you are from IITs, both the founders, right?
We are six co-founders. Five are from IIT, one is from NIT.
Six co-founders.
Yes.
Okay, I didn't know. Interesting. All right. Uh, this is a question from Shubham Malani. He is my level 3 student. I think he's past CF level 3. He's a distributor based out of Sangli. His question is, can a distributor distribute your products? For example, many of his clients would want to buy your bonds. Is there a distribution model currently being built?
Yeah, I mean, we are figuring this out. Regulations are not yet clear on this, but I'll ask him to just reach out us on partner@wintell.com, partner or partners at Wintell, or just write to me at ajinkya@wintell.com. So whenever we open or whenever we have something going on, we work with some distributors today.
So
Very small.
your legal right now is, so on the legal front, you're a broker for bond markets at the front, right?
Yes, and broker plus online bond platform. Today, online bond platforms cannot have distributors.
Oh, is it? Okay. Interesting. Understood. Uh, Harshil is asking, is GoldenPi your competitor?
Yes, yes.
Yeah,
There are some 32 players who have online bond platform license.
understood. Okay.
So our differentiation is we have positions like we co-invest.
Right. That which is the next question. Karan Malpani is asking, does the co-investment criteria apply for all the bonds sold on the platform?
Yes, on our platform, yes.
So every bond which is being sold, you're also buying 2% of that total issue. Okay, very nice. Chaitanya is asking a generic question, and feel free to answer this. Chaitanya says, I want to get into management consulting. I'll give you a little background. This is actually a career AMA. So a lot of people will ask career oriented questions. I want to get into management consulting. Currently, I'm a BCom student at DU. I'm considering doing CFA. Do you think it will help me or should I do an MBA?
I don't have an idea, to be frank. I mean, but I like in general, I will say if you want to do MBA, do it from really reputed college. Mid beyond first probably 20, 30 college MBA is not that
Yeah,
relevant.
makes sense. Yeah,
It,
true.
it is even if probably I know in corporates you need a MBA degree, then and you can do that part time also. Like if you just need that degree.
Yeah, I mean, especially, and I think the question was on management consulting, your McKinsey's and Bains of the world. I don't think they are recruiting CFAs directly. I haven't come across any of the management consulting firms reaching out for placements. Typically, their catchment area is they'll look for IIT, MBA, IIT or IIM type of profiles. So I think that would be a way to look at it. Selvan Jaya Velu is asking, how do you think AI agents will help out advisors in wealth management platform to cater to their clients?
Similar way how it can help clients, right? And advisors will have with different use cases. They might saying ki this client is expecting this, and so AI. So what is AI today doing? Conversational AI or anything is they have a deep source of knowledge, and you can converse with it, right? It doesn't give very specific solutions immediately, but obviously we will have models which will give specific solutions eventually. Today, it's more of a generalist. You can have a idea saying, okay, this client is hell bent on this. What should I give? So it's AI does that soundboarding kind of job today well. So advisor can use it. Whatever problems he faces with clients, he can discuss with AI, and
Hmm.
AI can potentially suggest solution. AI like again, advisor has to apply his mind, his mind.
Understood. Okay. Uh, Akash is asking, will the new SIF structure disrupt the way you guys are working currently? I'm not aware of SIF structure, if you
Well,
know.
so
If
these
yes,
are SIF is basically special investment funds with 10 lakh.
yep.
Yeah, yeah. So we will also figure out a way to launch SIFs eventually.
Sorry, can you explain what is an SIF and how does it work?
So mutual fund is designed at a, let's say 500 or 1000 rupees SIP, right? So mutual funds are very heavily regulated. So SEBI will tell them sectoral exposure, stock level exposure, etc. etc.
Hmm.
What that makes sure is there is no downside, but it also caps upside.
Hmm.
Now SEBI is saying, okay, if somebody is investing more than 10 lakh, then they are equipped to take more risk. So we are okay to give more freedom.
Uh,
So they have come out with this SIF structure. I think they will come out with regulation etc. Is these will be special investment funds which will have far lesser restriction, but minimum investment per pan is some 10 lakh.
hmm.
So they can potentially do derivatives on, let's say, now if you see in debt fund, in all debt mutual fund, the sectorial cap is 25%. So NBFC is a mega sector which gives higher yield, but debt mutual fund can only invest 25%. So that
Hmm.
potentially kills it. Now in the SIF scheme, maximum exposure in one sector is 75% in
Hmm.
debt.
Interesting. So, but this will be issued only by the mutual fund companies, right? You'll need a mutual
Yes.
fund license to be able to issue this, right? Okay, so basically his question is, if an SIF structure comes, how will it disrupt your business? I don't see any way it will. How will it disrupt?
No, no, we have bunch of players who invest. We have a bunch of investors who invest more than 10 lakh. We
Right.
will also launch our own SIFs. That's the vision. We'll have a AMC license eventually, or we could collaborate with some AMC to launch that SIF specifically.
Okay. Chaitanya Kirti is asking, Ajinkya and other co-founders, why are fixated on solving this particular problem? They must have had wide exposure, not studying finance but building financial product. Is it not correlated? Okay, I think in simple, the question is, why did you choose to solve this problem and not anything else?
You have to choose something. No? There is no really specific reason I could argue saying this was my calling duties. We just enjoyed solving this. Thought this will be a big business. Ultimately, we are here to make money, right?
Right.
And this is where big money can be made.
Yeah.
Therefore, we just focused on this.
And it's a good pain point to have, because I think what you are going is democratizing bond
Yes,
investment in a way, because a lot of retail investors would not have access to
yes,
multiple bond platforms that you have. So in a way, it makes it easy for some investor who's willing to do
yes. I think I've been lost. Hello. Hello. Hello.
I
Hello.
think,
Can you hear me?
yeah, okay. Sorry, I think we had internet completely dropped off. Am I audible now?
Yes, I don't know.
Let me check if it's still
Yeah, I
streaming.
can hear you.
Okay, great. I think we're still streaming. Can you confirm? Okay. All right. Sorry, yes, we had some little internet issue. Uh, but yeah, we were talking about why this problem, right? You said it can be solved. Will help investors. I think that's it from our side, Ajinkya. I think there's one candidate asking, "Hey, are you only offering any internship for undergrad students?
Only if they're going to join full time like, after
Only if they're willing to join
ending the
after that."
internship.
Yeah,
So
sure.
yeah, we don't want to offer summer internship. It's very difficult. Nothing great comes out of it, my personal experience.
Right. So, but you're open for longer term, 6 month type of internship for candidates.
Absolutely. Absolutely.
Sure. Sure. And they can reach out to you on how?
Ajinkya@internship.com. I'll redirect them to the right
Oh,
people.
fantastic. Last question, then I think we'll let you go. Uh, this is from Amay Saraf. Amay is a FinTree alum. I think he works in Middle East now. He says, "Hello, Utkarsh and Ajinkya. In the past, I've worked with Ashish Ghia Derivium Securities, one of the largest bond market maker. As we know, current situation of GSEC versus corporate bond marketability. Okay, do you have any insight? I think the question ends there. Is there anything that you're getting from
I don't
this?
have much info. I'll tell you, G6 are not that relevant for retail investors. For
Hmm.
them, FD is a key product. You wouldn't see a lot of retail people coming and buying G6. Right.
Right.
G-Sec is great if you want to play market long and you really want to have long exposure. Those are very HNI type of products.
Hmm. Sure. But yeah, if someone wants to do duration, then I think your platform does not have duration as a risk exposure for the investor right now.
No, 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 not yet.
Not yet. Okay. Sure. That's it. So thank you very much, Ajinkya. It was an interesting conversation. I learned a lot.
Yes,
I wish to
definitely.
have you again on the platform someday.
No, my pleasure. Thanks for having me.